Thank you very much, Mr. Bishop, and thank you for your introduction, as usual. Okay, thank you. Welcome, everybody. Once again, thank you for the time that you're taking with your busy schedule in order to check the webinar. And today we have a very useful topic for all of you who are in the accountability department. We are going to take a NAV year-end tour. We will explore the general steps to perform a year-end closing and general setups and periodic activities that we actually require to do this task. So we're going to have a brief introduction of the topics that we're going to review, the agenda, the procedures necessary, because most of you have different modules in your own installations, where we are going to go through some of them with the general characteristics in order to be able to close the modules. And at the end, but most importantly, focusing on the accounting department, where we're going to be then closing and showing you the functionality to be able to open a new year and process all your information so you can generate the last and the closing reports for your company and the auditors. Now, the first thing that we need to explain, of course, we're going to have a session with at the end with the questions that you have. And for us, it's very important to receive your questions whenever you would like to ask something or giving us comments. Do the variability of the year-end process for every company in each country. You might be focusing on taxes, on other. If you have, especially manufacturing, your costs as an example, as an instance, will be really important. So for us, it's a general closing process, but anyway, really, really good, because I'm going to be covering majority of the information and modules. If you have, well, pretty sure most of the information that I'm going to be using, showing, you're going to be using it. So let's then just begin. And let's talk about a little bit about the process, right? For us, the first part is to understand that we have, of course, different type of modules. So we are going to separate now the operations and the information in finance. So we have the general ledger, and that's the one we actually want to close. But we receive information from different sub-ledgers, such as inventory, we have cash management, we have different setups, and so on. But the idea is to review all this and make, at last but not least, a quality control for you and questions whenever whenever you want to ask something. So as a general review with the finance closing process routine, we will close the sub-ledger for accounts receivable, payables, review and adjust our inventory for closing purposes and revaluation. And we will review the cash management and bank reconciliation, right? Very important, these topics, and so on. So at last, we're gonna have some questions. And I have added some other like manufacturing and purchasing activities. So what's our recommendation or best practice to go ahead? But this is not only for the end of the year. So I'm going to give you some tips whenever you need to apply something on a monthly basis, like the bank reconciliation, like the inventory, and so on. Now, one of the topics that you might require sometimes to see is LS Retail. If you want to work with that, I can give you a separate a brochure with information steps, or if you want, I can give you a summary, because I cannot at this point cover all the entire functionality to close all the modules. But still, LS Retail is important to understand that we might need to review all the accountability for your payment methods that is correct, and the cash flow, and some other activities that we would sometimes do with LS Retail. Now, it depends of how your procedures are, right? But now let's just understand that, however, no matter the module, the step number one, if it's a retail, manufacturing, or just finance, some of you only have some just the first package of our implementations with Microsoft. So the first step for all of you is post all open journals. It's a time of the year, again, as we are in the middle of the fourth quarter, and the last part for many companies. Below is our short checklist for you to quickly and efficiently close your application. So feel free to send us your questions as well. So in Microsoft, this is the checklist that we're going to review, the general checklist that we have. So in order to understand the open journals, in step number one, we refer to the payments that you do, for instance, your payroll. You need to process all your deposits and cash receipts. We strongly recommend, first of all, focusing on your cash flow activities, since we surely don't want to forget that part. And that's the one that we must consider, the first step to consider prior for the year to be closed. Okay. Then we might have also post-recurring entries for the year to be closed, since we generate for some implementation this functionality, recurring entries. It refers to a journal as well, but this is an automated process. For instance, whenever you need to pay the rent, okay, we don't want to come in the application and do that all the months or this type of periodic payments or activities. And we can just automate that process for you. And that's what we call the post-recurring entries for the year to be closed. So in the step number two is as well as financial journals in the open journals, payment deposits, and so on. But this is the automated part for recurring journals. So recurring entries as well are posted. Then inventory reconciliation for the end of the year, we need to make an evaluation for your, or a monthly reevaluation of your inventory. Depending on your industry, that's very important, or to correct errors, you may be able to reevaluate your inventory as part of the year-end process, right? So I'm gonna show you what is required there. Of course, it depends. Inventory is purchases, inventory is manufacturing, inventory is stores. So we have in different dependencies and warehouses these assets. So the idea for those of you in manufacturing, well, it's counting is processing your WIP products or raw materials and so on. In the stores, well, just count your inventory, the last counting for the end of the year as an example, right? So that's the idea of, and of course the warehouse. Now, when we talk about revaluation, this is the financial part. So we might make a count. We need to know what's the actual inventory, the real one, with no deviations at all. So we strongly recommend for every end of the year. That's why we make this webinar in the very first part of December. So you need to count your inventory, and then we have some processes internally in NAB. So once you adjust your physical quantities in all your warehouses, stores, manufacturing, and so on, then what we are going to be running is some routines to adjust your cost, post it to your GL accounts, and then reconcile it, of course, by having some reports that I'm going to be showing you. So as well, try to tie the inventory that is yet not received or either not invoiced. So it will be meaning that yet specifically for inventory that you are purchasing but have not yet invoiced, then we might consider to have that expected value on our GL accounts, right? So we need to review that as a liability for some concepts. It depends of your operation, but that could be possible as well. So we need to type, let's say the sheet not invoiced, accrued cost of goods sold whenever they apply. So this is contra asset, all right, for the accountability part. And then we call it the net inventory. Net inventory posted to your GL inventory interim account, and that's a inventory that yet you have not invoiced, right? But we consider that as an asset still. So we need to review that for you to understand for all your processes, at least just to have a hint of what you need to do and give you the procedures. Then AP and AR reconciliation is another subledger, very important. So here the idea, as you already know, is just tie your vendor balances by vendor or and posting group and tie it to with your GL, right, at the end. But in order to do so, we need to review the aging information for all your currencies. So the most important thing for AP and AR is that, okay, in first place, try to make the for AP, according to the last budget or cash flow analysis, or simply by considering trying to target majority of invoices that you can pay. And AR as well, try to send all reminders to customers so you can receive deposits, right? And what the last thing we're gonna be checking that will be important just for you, the customers that have currently the fixed asset module implemented, you will need to just post your depreciation and then close those values for all the type of assets that you have, or either not only the group of assets, but the services, the maintenance, the insurance to be paid. So all the specific variables that could modify the value or the book value of your assets needs to be posted as well and paid, so you can remain with the last value of the every asset then to be depreciated, and the value will be then the updated one we actually want for December 2019 in this case. Now, manufacturing, it's all about completing your production orders and reconcile your work in progress. So you still need a value of that part. Number 7, bank account reconciliation. Well, reconcile each bank account using the bank reconciliation module. Basically, is that compare your book values, okay, to the chart of accounts. It's just basically the idea. And for multi-currency, well, remember to update your conversion rates, update your gain and loss valuation at the end of the fiscal year, and we have routines to actually work with that part in order to run one currency at a time for vendor customers and bank accounts. All right, so you can remain with the correct values. So once we do, if you understand this part, we have not yet reached the point of closing and show the routines. We need to understand first some sub-ledgers, but at the end of the presentation, we're going to see actually the year-end close process. We are going to verify the upcoming fiscal year calendar, created, make some setups, and if that is correct, well, then otherwise we can, once we just create a new one, close the one that we require, we still can make some adjustments. Close the income statement as well, very important to begin the new period, right? And what we do is, I'm going to show you, because we need to transfer all the value to our retained earnings account. So the idea is that we generate at the end our financial statements and budgets, run the year and fiscal year sheet for you to see the final result, and so on, right? So that's the last step. We need to pause the year and close a process and run it and pause the last statement. Now, we need to consider to make some setups. This is NAV. I'm going to be showing basically still in NAV, but I have some slides and videos for Business Central, but I'm still using NAV since we are closing, and most of you with this specific webinar is for all of you who are already working with NAV, of course. So the idea then is just to work with the same window. I'm going to open the general ledger setup, and you would need to just verify in the first place that all the people that will be closing and posting the different year-end activities have the allow posting from, allow posting to fields updated for the December, in this case, and January of the 2020 in this case. So this is a demo, right, that I'm showing, but here you can see the setup. Don't forget that you need to have your year periods, your accounting periods open. I'm just showing, we can create a year, just showing that, how it is done. You select your specific new date that will be January of year 2020, 1st of January, right? The starting dates and number of periods will be 12, right? And Business Central and NAV will be creating the new period. That's the first thing we do. And as well, okay, I'm just showing that we have different years here. And it's very, very important to understand that some of the years were already closed. You can see in the accounting period section, this is the most important part, all right, for you to know what is closed already. Also, we need to show we have inventory periods that we might, and we need to close. So this is the function, right? Just a general overview for you to see the accounting periods that are in there. We can create, close a year, and we have an inventory period, which is related to these accounting fiscal accounting periods, but we need to also close separated, it's a separated process, your inventory, all right? Just for you to see this window for those of you who are seeing this for the first time, right? So once we have the understood that we have financial and inventory, we would like to then, for all our users, verify that we also log all the, before we actually start closing, all our users need to only be able to post in the specific last period before we close. So in this case, now that we are in December, verify that your users, I'm just adding a user here for the first time so you can see where all the information once we create it. I'm just, I need to understand, and I need to put the, look, I'm creating a local account who is going to be running my processes, right? In this case, the NT Authority. It's strongly recommend to work with the one you used to install and allow it to run the processes, or this might be the controller as well, allow posting from to December and January, of course, because this person is one special will be the administrator of our process, and he needs to be able to post the last day of this year and the first day of the following year. Due obvious reasons, because we're going to be generating and closing information until December 31st to the new day of the new year, all right? So allow it, and he's the only one who is going to be allowed to be posting outside our specific current month, right? So that's the idea. These are the first specific topics we need to set up first, right? Now, for us also, we need to review the end of the month, a PNAR, process all the information for review aging, reconcile, and so on. Review your work date in this first process that you're going to be working with me to be able to transfer and set up your information for the work date for the last day of your periods, all right? So every module that we're going to be closing, this is just an example, but all of the modules that you're going to be closing, please set your work date in the last day of the month. In this case, December, and also closing of fiscal year, well, you will be working in December, all right, 31st. So change it so your posted transactions can reflect that, all right, the last day. That will be, in most cases, the majority, the last transactions you will be doing in a year, all right? So the biggest concerns around accounts payable at month end is whether expenses have been posted to the correct period per the organization policies on expense recognition cutoff, right? Given that by default, Dynamics NAV uses the current date as a working date. So you will need to be aware of this if your policy allows for the way to post expenses to a previous month, all right? So that's something you need to review with your controller. And many organizations will give a window of maybe 2 or 3 business days after the end of the month to include expenses that belong in the previous month. The same applies for the closing of the year, particularly if corporate cards are used, which have statements that are released soon after the end of the month. A typical month-end process for accounts payable in Dynamics NAV would involve separating invoices and expenses that belong in the previous month for data entry, all right? So hurry up with those. So a type of activities change your work date in NAV to stay the last day of the previous month. And this is what we are checking, okay? Just do it in your application and verify that part. And that's a best practice for you to then in the future continue to work like that, all right? So after we do that, we are going to be, you need to make some appointments maybe with your people to review your information in order to review these two reports. Very important. The first one is age accounts payable and receivable. The aging, of course, is the most important that we need to check to review the overdue invoices and try to avoid specifically some risks. Yes, yesterday we reviewed a webinar where we touched some reminders for the for AR and AP processes. We have a webinar. I strongly recommend you to see it where we actually check how to review the overdue invoices for the vendors, and we can tie our last payment of the year with a budget that you might have currently now, with a specific number, maybe priority for your vendors. So you might still be able to set up those variables and run AP routines. Now, at last, we just reconcile the submodules, subledgers, AP and AR to the GL report. So, which allows you to see all the purchase receipts or sales deliveries to have yet to be invoiced. Now, this is something that we just run in order to have updated information. And if I just go to departments, I'm gonna review, first of all, the payables and receivable reports. So you can see where they are. So you can actually understand how your last values are. So we have accounts receivable aging reports. And the idea is once we generate those, we have 3 different reports. All of them work for the same. I'm just showing you in this point that we are going to be running one for the year actually. For the last day, the age as of field in this example is going to take all the invoices for the year. So put it in the last day of the year. And the period length, in this case, the subdivisions of my report for the aging, of course, will be give me the invoices by month separated so I can see the value for the specific last 3 periods, which is the standard report that we're going to be looking at. So here we have all our accounts receivable aging. We have all the customers in the left side by currency as well, very important. So all these customers with the specific balances and currencies that we see here, we need to understand how it is then separated also. So the value that is separated, we can see in which month we are actually having an overdue value. So it's strongly recommended to avoid interests or fees, just to check this aging before closing, right? And then be able to proceed with your AR and AP cleaning activities. The same goes for accounts payable. I'm going to take a look at the age as of the last period, the last date of my current fiscal year. So I'm just working at this point in a demo environment, but I'm still selecting the 31st of December. By looking at the posting date in this example, I would like to review my aging report. It could be overdue for those of you who are trying to clean your report. And here is as well the same, the aging information in order to pay to our vendors by currency, where you need to check that, or just here the list of by period balances for the different vendors that we have. So once you generate these basic reports, you're gonna have a big idea of what you are actually facing by the end of the specific period. Now, the idea is that you need to review the balances, all right? Apply all your payments to all the invoices and clean all your reports for both modules, right? For some cases, it will be also important to also try to review purchases, okay? But here it's all about AP in the first place. We are just talking about these 2 specific reports that you need to run. I'm just giving you the tips if you are actually forgetting them while you are actually closing. All right, so very basic, just to understand it. A age as of within for the routine we have just reviewed for the reports. The point in time to run the report, all right, is age as of. The aging method, age based on due date, transaction date, or document date. So we have run it on posting date, but also could be run only for due dates. Just try to pay all the different invoices that are already due, and you can just review this. Then the third field, length of aging periods. Well, this is just a subdivision of the report, how you would like to see it. By day, 30 days, and here's the could be 1M or 1 month, right? So you can select the period, the periodicity for your period. So 30 days, if I just put 30 days in the period length field, then it would be giving me 30 days per column in the past, one by one. So if this is December, I will be the report will be showing November, October, and September. So gonna go backwards month by month in a division of 30 days. Now, show if overdue by is setting a length of period to use for overdue balances, all right? So you can set a threshold where you will also just see the overdue values, and it's gonna be showing it immediately. Then print details, you can just print it immediately. You want to set maybe all transactions one by one, not only the values, okay? That's also very interesting and useful for those of you who still do not, for instance, have BI, right? And that type of reports that are more like detailed information. So this report luckily have for you. That's why we have this type of webinars, for you to understand that the characteristics of the reports and information. And then if you only want just to pay your more important vendors, okay, or customers, set filters, okay? In the last part of the window that we have shown, in this section, we have just filters. Basically, it's just that, okay? So with this report, now you have information to use for either investigating, following up on reversing my credit memo in the past, I don't know, corrections, you know, past due posted payables that were, I don't know, incorrect. Use the total of this report by vendor, by posting group as well, and review your domestic vendors and customers, or your foreign, to reconcile to subledgers, basically. It depends on of your accounting process, the currencies that you use, and the corresponding payable control, right, to the account GL. We need to then review the results against the values, all right? Now, in order to reconcile the subledgers and reconcile a P&AR, it's important, this report shows anything that has been received or shipped through POS and sales orders, all right? Through purchase orders, excuse me, and sales orders. However, have not been invoiced, okay, very important. These items will consequently not exist in general ledger like we have seen in this previous report. So now what do we do? Since the invoiced amounts are what hit the GL, you can use the amounts displayed here to set up an accrual, okay, when necessary. Okay, just we would use the example, right? Now, for us, it is important as well to, how do we then reconcile, okay? We need to check it because we need the ability to see what is still outstanding, okay? That's different. So from the previous report we have seen, we are checking overdue balances that we have inventory or we have sold, or for services or products, but yet we still don't know what is still going to be impacting my GL, but not yet subledger accounts, okay? So sales orders, AP and AR need adjustments. That's why we still reconcile this part, right? So in this part, you would need to see what are the differences. Well, in this case are zero because of the demo, but surely if you run the report to reconcile, then you will be having some values that are posted yet, but not invoiced. And then in this, for all the customers and vendors in the difference column, in the last one, you will be seeing a difference. Hey, I have some information that has not yet impacted your GL, but I have it in my subledger accounts. Reviewing one by one all of my posting groups that I have, then I can see that everything is for this demo reconciled. There are no differences, okay? But run this report is very, very important to see that, because some of you might consider to accept the values that you have with differences or not. That would be then necessary, because if you just take a look at the purchase orders as an example that you have, you might have hundreds, right? How then you organize all those transactions for the inventory? And in order to close, at least to have a control on the actual values for the different domestic or foreign vendors or customers. So I strongly recommend to reconcile, because at last but not least, this is going to be impacting in the near future your actual chart of accounts. Run the report. This is the second report you need to run. So at least this can help you to realize which adjustments you would like to perform, all right? So before you can close, review the adjusting entries for payables and receivables, right? We need to make sure that anything we need to move, right, to our ledger accounts. So by the way, we just used purchase and sales journals to impact a sub-ledger accounts for vendor also sub-ledgers, all right? This is not an invoice. This is not a purchase orders. This is a purchase journal. This is more oftenly used, this is to make adjustment. It helps us with that. For those of you who have not yet used, also for Business Central, you don't need always to post an invoice. Why? You are not receiving inventory, right? For the vendors in this case, but also this applies. We use normally, as an example, this for opening balances when we implement for the first time, right? So why? Because we are, what we are actually doing is in first place, making an adjustment. When we upload the balances for the first time, we just select, okay, I have a balance with a vendor, and I just can, for instance, select in my purchase journal, also works for the sales journal, if you make notes, select that purchase journal for those vendors that you want to make an adjustment, right? When you know you have differences, all right? And then you can just set up the vendor account type and select the vendor for you to make any specific variable. And remember, this is the one that we actually use in order to upload opening balances. So this is how actually, this is the secret. We do not have all the purchases in our implementations. We do not post purchases. We just upload at least the balances of the vendor, because we need that information in our chart of accounts as well, right? So basically, we use this type of journals in order to make any type of adjustments. And at the end of every period or month, this is necessary, all right? So this is also, like I said, before you can close and review adjusting entries for payables or receivables, we need to make sure that anything we need to move to our ledgers accounts, we use the purchase and sales journals to impact the sub-ledger accounts for vendors and customers. So the sales journal is here, and we are not using, once again, an invoice, so or we are not selling at this point, all right? So we don't want to affect our inventory, because we are counting in the end of the year, but we will still need to make some adjustments to the sub-ledger for a customer, a specific customer, select the balancing account, maybe it could be sales against a specific customer, but this is an adjustment. Maybe you need to run an invoice that they have not yet sent or some, right? Or any balance that is not correct, you can still adjust it with this sales journal, okay? Without having to create an invoice or credit memo. You can use this one just in order to impact your sub-ledger with the specific GL account, but do not require further documentation as invoices, inventory transactions, or any other procedure, right? So you have it. Then once we have done our adjustments, whenever they are required, and our applications, we need back to our sub-ledger account in our payables and receivables, we will then want to do a reconciliation, all right? So once again, in order to review, right? So we have the report reconcile AP to GL. Once we know everything is perfect, we have made the necessary adjustments. And here, it's all about, let me just move the actual transactions. Here's the report, reconcile AP to GL, okay? Many ways to reconcile, like we have seen already, but once we are sure that what we're doing is correct, run the reports in AM, here in NAV, and just showing you the best practices to run reports in NAV packages once we have run all the reconciliation part, right? So the idea is to generate the report in order to see the information for AP and AR to GL, just to see if we don't have actual differences, right? So run it and try to then look at this, reconcile AP to GL. This is just the actual a report you need to run, and all the information that you have adjusted recently will be directly transferred to your GL. So with these procedures, it's very, very easy to have and to provide maintenance to all your subledgers, to review whenever they apply what type of transaction you need to post actual invoices or just make adjustments to purchase and sales journal, reconcile, and at last but not least, run well, the reconciliations, update your submodules and review that the GL value is correct for all the values. Whenever, once again, you have differences, you already know which report to run. And when you need to make adjustments, you already know which journals you are going to need to use. Now, talking about inventory, this is now the subledger only for inventory. The inventory reconciliation as end of the fiscal year date, we call it a revaluation basically, okay? Depending on your industry or to correct errors, you may be able to revalue inventory as part of the year-end process. So here now is the time. We have different routines. Look at this, we have plenty of different routines. But in this case, you need to understand what we are going to be doing, and you are going to wrap everything in a very easy way. First of all, run the adjust cost routine, all right? This is going to help us to update the transactions such as purchases, sales orders that have actually moved our inventory into the warehouse or out of the warehouse, right? So the cost of thousands, possibly of thousands of transactions need to be updated because the value has changed. Remember that for majority of us, we are purchasing and the actual cost is variable. So we need to run this routine in order to have the cascade process where we would run and have the historical item data by day for all your transactions, then by week, by month, and with this, if I have increased the value, as an example, I have just purchased an item with an increased cost, that will be affecting the value of the inventory in the future since the day I purchased, because majority of us also work with valuation that will be related to FIFO transactions. For those of you who are specialists in cost, behind the FIFO, you already know that we have average values for your inventory. For those of you who still do not understand why we need to make an inventory reconciliation, with FIFO, LIFO, or other, except for the standard, all right, and specific type of cost that you can set up in your items. Standard means that you are the one planning your inventory value through the manufacturing bill of materials process normally and your planification, all right? But for all of other procedures, we have FIFO, LIFO, other type of costing methodologies. Now, what we actually do is just run the following routines that I'm specifying here. Just look at them, and then maybe I'm going to show you some examples now. The run adjust cost routine, run the post cost to GL routine, run the inventory reconcile to GL report. All of this, specifically the three first, are going to help you to update all your transactions, review the cost, run the cascade process, right? And have the total value in the last date and the average value of the specific period. That's what we want to have in GL. Okay, that's a revaluation. Then the idea is that we need to also review some other transactions like items we have not yet received, right? They will be affecting in the near future, but we consider those as accruals. Also, we have ship not invoiced, all right, posted to GL. So that will be costing a cost of goods sold contra asset, right? Tie the net inventory interim posted to GL to your inventory interim account asset. Tie the inventory post to GL to the inventory asset account. Okay, I know this might sound like too much, but these ones that have the word tie are for those of you who have not yet received all your inventory or either ship all your inventory to the specific customers, right? Or receive all the inventory or an invoice the purchase order from your purchase orders from your vendors. What do we do? Then reconcile. Reconcile all your accounts. Know the values of the inventory you have in warehouses. Know the value of the inventory that you have not yet shipped, or maybe you have shipped it, but not invoiced, okay? But that at some point will be a cost of goods sold. So we need the value to reconcile it into our interim accounts or a contra asset account, okay? And so on. Review it and check it. Specifically for those of you who just received purchases and immediately invoice once you receive inventory, this last tie, these four lines won't apply. So for all the companies, run these three, run the adjust cost routine, cost the GL routine, run the inventory reconcile to GL report for all of you. Then, if you are working with a purchase orders, you have a big back order of purchases, run the tie the receipt not invoice posted to GL to your inventory accrual account liability. Let's take a look. For me, I need to run the inventory evaluation, okay? As we know, in any closing activity, we must run the inventory evaluation once inventory is cycling again, okay? We know this is critical to run as an inventory evaluation report. We wanna make sure that what we run on the last date of the period we are going to close, okay? So this is it. This is the inventory evaluation report. Take a look at the fields that I'm just looking for, the ending date, the last date of my year, and so on, okay? So this report displays the inventory evaluation for selected items or for all your inventory. This report also shows information about the value of increases and decreases in inventory over a selected period, okay? The printed report always shows actual invoiced amounts. That is, the cost of entries that have been posted as invoice, remember that. The report will also print expected cost of entries that have posted as received or shipped. If you select include expected cost, for those of you who work with expected cost, okay? On the options fast tab. The printed report groups entries by inventory posting groups, entries by inventory, and for each inventory posting group, the report shows a group total of 4 invoiced costs. If you have placed a check mark in the include expected cost field, the document will also show a group of total value of invoiced and expected cost. For more information, well, if you want to learn more about cost, just send me your request, okay? So before you run this report, you should run the adjust cost item entries, all right? Very important. If you do this, the values showing the inventory evaluation report will be up to date. If you run this report without first running the batch job, then the values in the report may be different from those in the status report that we manage, all right? So important, super important. Review, run the adjust cost item entries. Remember, adjust cost item entries will help us to update the values for all the thousands of transactions. Then we come and review your valuation. Don't forget that part is super important. Here I'm just showing you where you can find the adjust cost item entries. As we know, and this is the most important a part, and then you can run your valuation with or without the expected values. So it's up to you what you actually want to use. And if you have doubts about expected inventory, just send me your questions so I can clarify. And last but not least, a post inventory to cost to yield, all right? We need to record the quantity and value changes to the inventory in the item ledger entries and the value entries when you post inventory transactions such as sales shipment or purchase receipts. unless you have selected one, we have very important for when we run the inventory routines, we need to differentiate one single procedure. When you have the automatic cost posting checkbox in the inventory setup window, the inventory costs are not recorded dynamically, all right? In the general ledger, and cost of goods sold is not calculated in the connection with a sale. Therefore, you must post to general ledger manually by running the inventory post cost to GL, all right? This is a routine that we run if you don't have selected the automated process, so you at least run it well, we strongly recommend to run it on a daily basis, but as well to try to have the actual cost amounts posted to the GL, all right? Very important, with expected cost. So remember, in the inventory setup, we have an automatic process that we can select. If not, run it manually. We still recommend to run this post inventory cost to GL on a periodic basis, okay? Very, very important for those of you. This is the setup I was talking about. We have the automatic cost posting check mark. Well, just in this case, I have not marked this, but go to the inventory setup, review it. If this is the case, if it is automatic or not, well, just to run your batches just to be sure about the last values. So to me, the idea is to understand how to update the cost, okay? But then I need to go and post the values, all right? To run a look at the inventory period here that I have. We have one a specific functionality to close my inventory at some point. So the idea is that before you do anything, update your information, update your costs, and then close at last but not least, the last period, all right? In this case, we're gonna be closing until December 2000 of December of my year, okay? So here, we are gonna be closing your inventory, all right? So this is especially important whenever you are working with costs, with manufacturing as well, but for all of our purchasing activities that also generate inventory values, run and close then as last activity before closing the fiscal years, close your inventory. Very, very important to do so. So any sales order or any type of transaction is updated. Right now, you can also reverse entries. Any sales order or purchase order that need to be invoiced in parallel, right, with inventory physical count will impact our inventory. So we want to make sure that our team is management any document that needs to be received and invoiced to our customers or vendors so we can move forward. So don't forget it before actually do any type of a process. We need to be sure that all our back order it's updated. Okay, then it's super important to proceed with all the invoices that we have not yet completed. This is maybe the most important task because it will take some time, some work, okay? We need to accrue and make that a periodic reversing entries for 2018. Well, 2019, this is a standard reversing entry so we can conclude in the inventory side of the costing, okay? So work with that, okay? If you have issues, you can post all credit memos whenever, okay, are required, all right? So here I have my purchase orders, all the ones that are released. I'm just checking all the different purchase orders in the different warehouses that I actually need to receive. right? Just take a look at them, take a look at your back order and so on. This is previous, talking about inventory before running all our routines that I showed before closing even your inventory. This is the task that you actually need to perform, all right? Review your back order as usual. But now it's super, super, super important. More than ever, every time we just want to close the year, okay? So this is it. This is actually something really important that we need to do, all right? And then we're gonna talk about a little bit about cash management, okay? The cash management is just basically the reconciliation, okay? At regular intervals, you must reconcile your bank accounts uh, by matching bank ledger entries resulting from the posted payments with the related transactions or your electronic bank side, and then post the balance to your bank account. For this purpose, bank account reconciliation windows is divided into panes. This is for W1, okay, but we also have the American or a US version, okay? So this is just perform your bank reconciliation independently of your localization form. So the idea is that you can use either an automatic or automatic or a manual matching function to match lines to panes. This is just the general reconciliation procedure. I'm going to be focusing on all of that. We have a cash management process, but the idea is that here in the bank reconciliation, you have in the right side, all your transactions that were actually posted through the bank accounts. So all your cash transactions are here for deposits, for payments that you use, and you can, by selecting the reconciliation, in this case, if you can see, I'm reconciling the ABC Bank. In the right side, I have all the transactions, and in the top, in my header, I have all the values for the reconciliation and the reconciliation that I need to reconcile that value, okay? The statement date as well, review the for every month. If you have not done it yet, please check it to perform other reconciliation for all the different periods, all right? Very, very important. So this is it. Just showing you where to do so, what is the actual importance of this. We need to perform all these tasks, okay? So with links to, that links all our sub ledgers, okay? So very, very important that you review all the information in your banks to make all the different, call the bank to give you the last statement, reconcile it against your GL, and with that, we will be then finishing with this basic part, all right? Then, for those of you who are working with the cash management, it's all about making the reconciliation. And if you have delinquent checks, well, it might be a matter of just, if you need to review them as well, it will be really important to start now. And here in the reconciliation, we can also make adjustments, okay? We have adjustments that can be performed without issues. Okay. Last but not least, let's talk about account schedules. Account schedules are reports generated, or this is just a summary of what you need to do. So you might not even be working with account schedules within Business Central or NAB. You might have your BI tools, which could be showing your financial statements, and your P&L and your balance sheets are already there. But I'm just showing the account schedule because it's the most common, where we will be reviewing the actual reports that we have generated, maybe in this case. So review your standard reports like a balance sheet, review the P&L, review well, in this case, we are just checking some of the reports to see the last values, the variances for the last year. The idea here that I'm just trying to provide is just review your final reports. Your final figures is the most important at the end. So you can agree with all the different managers in the different departments that all the information is okay, okay? So now I'm just showing the values, the net change, the budgets, and the variance. This is a account schedule coming from the standard implementation that we normally do, but also review cash flow, review P&L, balance sheet. Whenever you have, you can review your purchase expenses and so on, okay? Just showing you, and giving you the idea that after you have closed all these subledgers, you might, and you need to review your reports to see if the actual figures correspond to the actual procedures that you run. And in order to obtain the last information, last unupdated information for the year, this will be one of the last tasks that you need to do. With this is the actual part where we need to close. We have seen AP, AR, inventory, procedures to close the cost, basically, right? We have understand that we need to run our back order, review it, post it for sales and purchase orders, and we need to run and update the banks, very, very important, to reconcile them, at least for the last period. You have still a period of grace, maybe for 1 or 2 days after the beginning of the new year, a new period, in order to make the reconciliation. Once that is done, run your reports, review the last figures, in this case account schedules, but also could be your third-party software where you actually run BI reports, check them, and when you are sure about the figures that they are correct, let's review the closing activities. The closing activities are actually in order to close. We have created in the beginning of this webinar our accounting periods. Now we are going to be closing. Once we have the new year created for the following year, the upcoming year, we're going to need to close now this current year. So here's the function. So the close year is going to give you the possibility to close your year here. You need to close also your inventory, like we have said. And here you can see how we have check boxes for all the months where you can see which periods were closed already, all right? This doesn't mean that you cannot perform any adjustment in the future, but for now, we mean that we want to close it. We need to check and mark what we have just closed up to now so far, and basically it's just that, all right? So here you have that function, very easy to use. And once we just do that, we need to actually review the actual operation, right? So when I take a look at my accounting periods, I would need to click on close fiscal year, click on yes, and let me see. Oh, now I have done this also for those of you who now work in Business Central. I just wanted to show you because it's actually the same functions, it's actually the same, but I just wanted to show you that within the same accounting periods, we have just the possibility to review the same information. It's just exactly the same. I'm not doing, the functionality is also the same for those of you who are actually now closing. So I added the two type of interfaces because some of you are actually working with this now in Business Central. So it's important for you to see the windows. We have the same processes, right, to close and create the year, right? And here is the same function. I just wanted to show you in this interface the same functionality. So in this case, I will be closing a period. And then in this case, I'm just closing the last year, 2018, right? But immediately you can also open, look at this. We have just closed and you can see the check marks of the 2018 year, right? With this, we are saying that we are going to be posting only transactions in the new year for 2019. And in this case, for the actual procedures we will be doing will be for 2020, okay? So once we are closing, this is the close income statement. This is the last thing we need to do, okay? We're going to be transferring all the GL values in the P&L to an income, to a retained earnings account, okay? Go to the close income statement function. Here we have the fiscal year ending date that you want to close. This is the last date of the year that you want to close. Input one retained earnings account. This is used in order to receive the final result of the year. And here you can post to retained earnings account just a total balance of the year or the details by account if you want. It's up to you. Then a posting description. Well, this is the closed income statement, very important. And the business unit codes that you use whenever they apply, if you use them, and dimensions, okay? Dimensions, for those of you who use dimensions, this is very important. So in this case, I'm using department close by dimension as well, my figures, to begin the following year with the actual values that will be 0 for the next year. And we are closing also my P&L with my dimensions. And here I see that with this function, close the income statement function, I have generated a general journal. So you might as well do it manually, but we have a function that does everything for you, all right? So that's the only idea. We have all the specific GL accounts for your P&L in this case, right? In the same general journal for, well, it's your sales, costs, expenses, and so on. And here the values that we are going to be using, that will be the actual balances that these accounts have for the end of the year, all right? For the different accounts. Let's take a look, salaries, retained earnings. So the retained earnings is going to be totalizing all the results for the other P&L actual P&L accounts, all right? So you can post to retained earnings account, the result of the year. That will be the last thing that you need to perform in order to close the last part of the year. So this is it. Thank you very much for your time.